With the latest trading era out of Knight Capital, there are always winners, but there's always some losers. I'm here with Jim Frischling from New Oak. You're the president and co-founder. You've seen this happen before. So who wins in this situation? Clearly, Knight loses and their shareholders lose.
Well, on the winning side, I have to believe that given the consortium that came together to quickly save the firm, save Knight, and particularly Blackstone, who had looked at this firm outright as a potential acquisition or for investment several months ago, I imagine they got a far better price today than they would have received then. I think all the firms that participated saw value, and given the urgency to recapitalize Knight's balance sheet, it's safe to say that they cut themselves a far better deal than they could have afforded themselves if the urgency had not been so great.
Well, TD Ameritrade came under some criticism because people felt like, yeah, they came to the rescue, but they also had some skin in the game and they were really just protecting their initial investment.
I think a lot of the folks that came together, including Getco, this is a business where I think some people had speculated that there's blood in the water and the sharks were going to go after it, and quite to the contrary, there was blood in the water, and yet people felt it was important for a market maker of Knight's prowess and magnitude. I think upwards of 10, I even hear 11% of the market. It was important for that entity to continue. They weren't too big to fail, but I do think the folks that got behind it and a number of folks like their direct competitor Getco decided they were better off with Knight continuing to operate for their own business model and for I think for the electronic trading platforms in general. This was a good day for them because I shouldn't say good day, but a failure of Knight could have created a far worse scenario for all of them. When I think about those who might have lost in this one, I think the retail investor is not doing well in this environment. They've stayed out of the stocks for the most part. The market has rallied. They have not participated in this rally. And whether it's a flash crash or the Facebook IPO, and now we have the Knight Capital trading glitch, all of that only reinforces the concern that these investors have that there really are risks in these markets, and some of it is just beyond. It's man versus machine, and right now the machines might be winning a little bit.
This market has fewer players.
We're coming into a Monday where we're
would enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.